Hey Puppy Trades! I wanted to do a video analysis update of the stock market. We'll talk about the usual suspects like Amazon, Apple, Microsoft, Nvidia, Advanced Micro Devices, Enphase Energy, Berkshire Hathaway, Disney, Procter & Gamble, and Walmart, Nano Dimension, Tesla, Workhorse, and Arcimoto, the S&P 500, Chevron, Boeing, American Airlines, and some true value stocks like Trinseo Corp, Unifi, Energy Fuels, and Pfizer. I think that, I wish this was the last day of the month, because there are some really interesting long-term opportunities, in my unprofessional opinion, that I will be taking advantage of, and most of them are in the value sector right now. But first, what I want to show, I like this guy's work. I'm not throwing a new indicator at you guys, but this guy, MSI Research, he's developed a kind of proprietary algorithm, essentially that gauges sentiment in the stock market based on inflows and outflows and all this stuff. I think it's pretty interesting. I don't trade based on this, but I like his work. He says that the negative sentiment of the stock market spiked to 37%, which he says is the highest value for the year for the stock market. So that's what these big red lines represent, is the amount of fear that we have in the stock market. And I first got interested in his work when he said we were super afraid back in quad witching. But he says right now, this is the most afraid that investors have been in the stock market all year. So I thought that was pretty interesting. I think we're being a little dramatic, but let's talk about the stock market. Let's talk about Amazon. Amazon is the only one of these four stocks that I talked about on May 23rd that has not yet reached the minimum wave 3 target. So if you want to know where the S&P 500 is going and the stock market is going, you have to look at the components of the stock market. You have to look at the largest stocks in the world, and you have to look at stocks in different sectors. So that's what me and Nancy Pelosi were doing on May 23rd when many said the stock market was going to crash. We said, wait a minute, Apple is at the 61.8% retracement of a 5 waves advance. So this is wave 1 and wave 2. We're looking for a wave 3, 4, and 5 higher. We said that Microsoft was also at the 61.8% retracement. We said Amazon was at the 61.8% retracement. And we said Nvidia was at the 61.8% retracement. And it was breaking this downtrend line. So it was really helping to confirm wave 2 had ended and that we were within a wave 3. So we'll talk about all 4 of those stocks. But we're going to start with Amazon, because it is the only one that has not yet reached that conservative wave 3 target, which is the length of wave 1 placed at the wave 2 low. So this is our 1, 2, 3, 4, 5 large degree wave 1, and an ABC correction puts in a wave 2 low. So the length of wave 1 placed at the wave 2 low gives Amazon a conservative wave 3 target of about 3,805. Now, that shows in the subdivision right now that this is going to be a conservative target. I believe this is wave 1 of wave 3, wave 2 of wave 3, wave 3 of wave 3, and wave 4 of wave 3. We're about to see wave 5 of wave 3 right now. But the bottom line is that when Amazon gets to 3,800, that's probably not going to be where wave 3 ends. I think Amazon's wave 3 will end between 3,800 and 3,969. Then that wouldn't be the top. We'll have a shallow wave 4 correction between the 38.2 and the 23.6% retracement of wave 3 to end wave 4 before Amazon goes on a 5th wave higher, which will be the length of wave 1 placed at the wave 4 low. That would take Amazon as high as 4,300. So in the short term, we're looking for Amazon to have more upside to about 3,800 to 3,900. But even that wouldn't be the top. We'd have a shallow and sideways wave 4 before a 5th wave higher takes Amazon as high as 4,300. Very unlikely the stock market will be crashing during that time. Let's talk about Apple right now. There's someone who, in the comments of my YouTube videos, they don't like how I draw my 161.8% extensions, right? They think there's a different way to get a wave 3 target, and that's fine, okay? But this is why I draw my 161.8% extensions the way I do, okay? I said that Apple would go the length of wave 1, placed at the wave 2 low for a conservative wave 3 target of 143. But the textbook wave 3 target was the 161.8% extension, which is 149. So, voila, that's exactly where Apple has had a pretty nice reaction. So let's examine Apple. I think it's telling a pretty important story. First, this is a wave 1 and a wave 2. We go the length of wave 1, placed at the wave 2 low. We reach the conservative wave 3 target of 143. And then look at this beautiful wick at exactly the 161.8% extension of wave 1, exactly how I drew it before it happened. Voila. That's the perfect kiss of a 161.8% extension for wave 3. So there's 2 possibilities right now. The first is that wave 3 is still in progress, and this wave 3 will extend higher with Amazon's wave 3, and then the wave 4 retracement zone will ultimately be higher. Okay, the second possibility is that we will stay red on Monday and Tuesday, and if we do, what the market bulls want to see is they're going to want to see Apple end wave 4 between the 23.6 and the 38.2% retracement of wave 3. What they don't want to see, they don't want to see Apple's wave 1 high get broken, and that also coincides with the 50% retracement of wave 3, which is 136. So if Apple's above 136 and 137, we're still looking for wave 4 to have ended and for Apple to go on a wave 5 higher. That would be the length of wave 1 placed at the wave 4 low. That would take Apple to around 160, 165. Now, I think that's pretty interesting because if you zoom out to the larger degree, that 160 number comes up again. I believe on the larger degree, this is where we began a new cycle for Apple on that 921 low, right? The third Friday of the September, when the quad witching date occurs, we have a 1, 2, 3, 4, 5 large degree wave 1. We have an ABC correction. We put in a large degree wave 2 at the 61.8% retracement. So I believe that's wave 1 and that's wave 2. The length of wave 1 placed at the wave 2 low takes Apple to a conservative wave 3 target of 160. Now, that's really conservative for wave 3. We'd have a shallow wave 4 correction. We'd be looking for a wave 5 higher. But the point is, we have evidence right now on the large degree and the smaller degree that Apple is going to 160, even if it pulls back into a wave 4 correction between 139 and 143. There's a ton of evidence that this is a wave 3 high. So even if wave 3 is in, this isn't the top. We have a shallow wave 4 correction and Apple goes on a wave 5 higher. Very unlikely that the stock market is crashing while Amazon is on a wave 5 to 4,300 and Apple is on a wave 5 as high as 160, 165. So that's Apple, that's Amazon. Let's look at Microsoft right now. This is another pretty template for the stock market. We can see Microsoft has a wave 1 and a wave 2, and then has another wave 1 and another wave 2. So the length of wave 1 placed at the wave 2 low took Microsoft to that conservative wave 3 target of 277. So if we zoom out right now for Microsoft, I think it's going to look something like this. This is a wave 1 and wave 2. Wave 3 is ending between 277 and 287 because 287 is the 161.8% extension of wave 1. So if Microsoft ends wave 3 at 287, that wouldn't be the top. We would have a shallow and sideways wave 4 between the 23.6 and the 38.2% retracement, and we'd still be looking for a wave 5 higher for Microsoft. So in the same way that we're looking for Amazon to go on a wave 5 higher to 4,300, we're looking for Microsoft to have a wave 5 higher down the line as high as 307. So it's very unlikely the stock market will be crashing while Microsoft is extending on a wave 5 higher past 300. So that's Microsoft, that's Apple, that's Amazon. Here's Nvidia. We haven't talked about Nvidia in a while because it just blew past that minimum wave 3 target. So I get a lot of questions, puppy trades, why don't I short at the wave 3 target? Why don't I short at the wave 5 target? It's because these impulse waves can extend indefinitely. So what's important to know about Nvidia, no matter how you count this rally from March to mid-April, there's very little disagreement. This is a wave 3 that happened. So I believe wave 3 for Nvidia ended at 835. I believe wave 2 for Nvidia, no matter how you counted, ended at about 538. So this is wave 3, and now we're having a wave 4 correction between the 38.2 and the 23.6% retracement. So we want to see Nvidia as general market bulls hold above the 50% retracement, which is 686 for this wave 4 kind of invalidation level. We definitely don't want to see the wave 1 high of 648 broken. But I think if you look at the RSI, there's an old school rule in Elliott wave theory that says that a wave 5 must end with momentum divergence. That means that if you're still making a new high on the relative strength index, you shouldn't be counting the price, impulse as a wave 5. So basically, if a wave 5 has to end with momentum divergence, we can flip that around and say, if we're still making new highs on the relative strength index with price, then there's a lot of likelihood that the impulse is still in progress. I think that's very much the case with Nvidia, where this is a wave 1 and a wave 2. This is a wave 3 rally. And we're going to end wave 4 between the 38.2% retracement. Right now, we want to see that 50% retracement of 686 hold. We want to see the wave 1 high of 648 not get broken. And then we'll look for Nvidia to end wave 4 at the 38.2% retracement of 721 and go on a wave 5 higher that will be at least the length of wave 1, place at the wave 4 low. And we should see Nvidia reach 900. Now, the very most conservative view is that at the very minimum, we're going to see Nvidia break to a new high above 835. And that's really important for the general market. I think that's the best message about Nvidia in general. There's a lot of evidence we're going to break this wave 3 high, and we're going to have 1, 2, 3, 4, and go on a 5th wave higher to 900. So that's Nvidia. Let's look at advanced market devices right now. I think on a larger degree, we talk about this a lot, how this is a wave 1 and a wave 2. This is a large wave 3 impulse, and an ABC correction puts in a wave 4 low at that 38.2% retracement. So I think AMD is probably a better opportunity than Nvidia. I think Nvidia right now is best served as an indicator for market bulls in general. But I think if we look at AMD, there's another message that we're getting. Yes, I really like this long-term setup where this is a 1, 2, 3, and a wave 4 that ended at the 38.2% retracement. So the length of wave 3 placed at the wave 4 low. We'll take advanced market devices to 136. I believe that target aggressively gets hit by the end of the year and pretty conservatively gets reached in the first quarter of 2022. But on the smaller degree, we're getting a pretty interesting message from advanced micro devices that's very similar to what we're getting from Enphase Energy. The point is that from this low that we formed in May 13th, AMD goes on a wave 1 and a wave 2, then has a wave 3 rally higher and puts in a wave 4 low. I believe it's putting in this wave 4 low right now. It's going to go on a 5th wave higher, and that's going to complete a larger degree wave 1. So just to recap, I don't think AMD, playing this wave 4 and riding this wave 5 higher is a great idea. But what I do think is that once we see advanced market devices break above 95.44, then that's going to confirm this is a 1, 2, 3, 4, 5 waves impulse from this low of about 72.50, and that's all going to complete a larger wave 1. We'll then have a shallow, well, not really a shallow, but we'll have a wave 2 correction that's going to be a really nice buying opportunity before we ride advanced market devices higher for waves 3, 4, and 5. The point is, in the short term, I think we've got evidence that advanced market devices is going to break above this high of 95.44. And that's going to give us a lot of evidence in the medium term that this is an impulse structure for AMD. And then, if bulls really want to buy a wave 2 correction to ride waves 3, 4, and 5 higher, the market will probably not be crashing during that time. So if we look at Enphase Energy, ticker symbol ENPH, it's a very similar idea that we're getting, where this is the low that we form in the middle of May, and then we have a wave 1 and a wave 2, we go on a wave 3 rally higher. So I think right now we're finishing an ABC wave 4 correction, and I don't think Enphase Energy or advanced market devices are great setups to play the wave 5 higher, but I think they are really nice templates for the market that, one, in the short term, we want to see AMD and Enphase Energy go on a wave 5 higher that breaks this wave 3 high. For AMD, that's about 95. For Enphase Energy, that's about 196. But the important thing is that once Enphase Energy and AMD go 1, 2, 3, 4, and then go on a 5th wave higher, that's going to confirm an impulse structure from this low that we formed in the middle of May. Okay, that's going to do 2 things. It's going to confirm that that's probably a very important low that we put in at 108, but also that this is 1, 2, 3, 4, and 5 completing a larger degree wave 1. And just like AMD, bulls will be very interested in buying the ABC wave 2 correction to ride waves 3, 4, and 5 higher. If bulls want to buy a dip in Enphase Energy and advanced market devices, then the stock market will probably not be crashing during that time. So that's Enphase Energy. I'll talk about Berkshire Hathaway. I like Berk B. I like it as a setup, but I also like it as a template for the value side of the market, where this is a wave 1 and a wave 2. This is a large wave 3 impulse, and an ABC correction ends at the 23.6 to 38.2% retracement. So bulls want to see that 38.2% retracement of 266 not get broken for Berk B. And then the length of wave 1, place of the wave 4 low, will take Berk B to 310. Now, the value stocks have not been acting the way I thought they would from a timing perspective, but all of the price targets are still very firmly intact. And I think right now, the pretty conservative time target that Berk B reaches 310 is in the next 3 months. Then we'll see wave 1, 2, 3, wave 4 be put in, and we're going on a wave 5 higher. There will be at least the length of wave 1, place of the wave 4 low. So I think Berk B will hold above 266, and I think it's going to reach 310. I think that's a very similar idea that we get with Disney, where we see Disney has a pretty clean setup, especially for the value and the travel and leisure stocks. I like seeing this breakout right here. This is a wave 1 and a wave 2, and then this is a wave 3. This wave 3 was very cleanly subdivided into 1, 2, 3, 4, 5 waves. Now we're ending this ABC correction at the 38.2% retracement. So I believe Disney will go the length of wave 1, place of the wave 4 low. It's going to go all the way to 216 for this wave 5 target. That's another one I think gets hit in the next 3 months. So I think Disney's looking really good. I think that Disney and Berkshire Hathaway aggressively, we see these wave 5s play out by the end of this quarter. But until they do, I think there's still a lot of evidence that the market has more upside. Just looking at Disney and Berkshire Hathaway in a vacuum, we want to see Disney above 166, confirm that's the wave 4 low, and it'll go the length of wave 1, place at the wave 4 low, go on a wave 5 higher to 216. So that's Disney. Let's talk about some growth stocks right now. But before we do, I want to talk about Procter & Gamble and Walmart. Pretty interesting information that we're getting from these two stocks, especially Procter & Gamble. I said it was going to be quiet, but this is a wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. We then have an A, B, C correction to put in that large degree wave 2. So the length of wave 1 placed at the wave 2 low gives Procter & Gamble a larger degree wave 3 target of 174. Now I think very aggressively that gets hit by the end of the year, but it's looking good. And if we zoom in on the shorter term count for Procter & Gamble, this is a wave 1 that is very cleanly subdivided into 1, 2, 3, 4, 5 waves. And we have an ABC correction we put in a wave 2 low. The important development is that we broke above both of these highs very recently. We've confirmed that this is a wave 1 and this is the completed wave 2 low. So bulls can move the stop up to 130, and then the length of wave 1 placed at the wave 2 low gives a conservative wave 3 target of 147. We'll have a shallow wave 4 correction before going on a 5th wave higher. But ultimately, we're within a wave 3 of a larger degree, wave 3, that will ultimately take Procter & Gamble to 174. I think that's pretty important, especially when we look at Walmart. Walmart is actually lagging Procter & Gamble. I'm not sure how many of us had that, but this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2 at that 50% retracement. It's identical to Procter & Gamble, where we see the length of wave 1 placed at the wave 2 low give a larger degree wave 3 target of 178. On the smaller degree, I think Procter & Gamble is acting as a cheat sheet right now for Walmart for how we're going to get there. That this is a 1, 2, 3, 4, 5 large degree wave 1. This is an ABC correction wave 2 low. Bulls want to see this low of 134 not get broken. Then Walmart will go the length of wave 1, place at the wave 2 low, and the wave 3 target very conservatively is 152. We see a shallow wave 4 correction before a 5th wave higher, but Walmart, like Procter & Gamble, very likely is within wave 3 of a larger degree, wave 3, ultimately heading to 178 with Procter & Gamble pretty aggressively by the end of the year. So that's Walmart, that's Procter & Gamble. Here's Nano Dimension. I think we're starting to see this phenomenon in the growth side of the market where potentially huge lows have been put in the middle of May. I think Nano Dimension is a microcosm of that. This is a wave 1 and a wave 2. And if we zoom in on the smaller degree, this is a 1, 2, 3, 4, 5, another wave 1, and an ABC correction putting in another wave 2 low between the 61.8 and the 78.6% retracement. So bulls right now really want to see that 5.39 will not get broken for a Nano Dimension. Okay, if it doesn't get broken, then that's a wave 2 low, and the length of wave 1, which was only about 4.5 months, placed at the wave 2 low, will take Nano Dimension on a rally higher to 21. Now, from a seasonality perspective, this was all from the very beginning of September to the very end of January. This 4.5, 5-month rally takes place. And so as crazy as it sounds, I still think aggressively that if we hold above 5.39, then we're going to see a huge rally to 21.22. If it didn't happen by the end of the year, I think it would happen with a lot of these other growth stocks that we talk about, especially in the clean energy sector, where it happens in the first quarter of 2022. But we're going to find out a lot about Nano Dimension in the near term. If it holds above 5.39, this wave 2 low is in. And if it starts rallying higher from here, then this is another wave 1 and another wave 2. We're going to see Nano Dimension go on a wave 3 of wave 3 rally higher. So bulls, they want to hold above 5.39. And if they do, this larger degree wave 3 target for Nano Dimension is up in the 20s. And this is around the time last year, from the end of, or the beginning of September to the end of January, that Nano Dimension has this breathtaking rally. I think this was only a wave 1 and a wave 2, and that a lot of growth stocks, we talk about Microvision a lot, we'll talk about Workhorse and Arcimoto next, are getting ready to stage huge rallies. And as we see the market get red, there's a lot of rotation, I believe, that's going on. I think high growth stocks and some of these value stocks are going to be ones that are really benefiting from that. Nano Dimension is going to be one of them as long as 5.39 is not broken. So that's Nano Dimension. Let's talk about Tesla right now. I think Tesla, we're seeing a lot of interest in the options market from Tesla. So, Tesla's been all over the bar chart straddle and strangle screener pretty recently. This is a screener that gives you a list of stocks that are going to have huge moves. It also filters for open interest, so it can be used as a smart money indicator. We look at Tesla right now. It's made a couple of appearances on the screener. This was taken last night. It's on the screener 3 times. That's a lot, to see a stock on the screener multiple times. I look at the strangle screener as well. Tesla is also making multiple appearances. So the options market is telling you, it's not confirming that Tesla's going to go up, but it is confirming Tesla's going to have a large move, and the institutions are very interested in options on Tesla. I don't think they're playing it to the downside. I think they're playing it to the upside. So on the larger degree, this looks a little messy. We'll zoom in on the smaller degree, in a second. I still believe this is a wave 1 and a wave 2. This is a huge wave 3 rally and an ABC correction putting in a wave 4 low at the 38.2% retracement. I think right now 539 will hold, as well as 546, and Tesla will begin a large wave 5 rally higher. I believe that wave 5 will be the length of wave 3, placed at the wave 4 low, and I'm looking for aggressively by the end of the year that Tesla goes on a wave 5 higher to 1,368, call it 1,370 for the wave 5 target. Okay, I think, pretty conservatively, that's reached in the first quarter of 2022. We'll talk about Workhorse, we'll talk about Arcimoto in a second to show kind of where the juice for that's going to come from. If we look at the smaller degree right now, as crazy as 1360 sounds, it might be within our sights that this is wave 1 and wave 2. We have a lot of interest in options on Tesla, and the options market is telling us it's going to have a large move. I think that move is going to be to the upside. This is wave 1 and wave 2. Tesla's not going to break below 546. The wave 3 target is 929. We'll have a shallow wave 4 correction before going on a 5th wave higher. So Apple, this is the exact same January 25th high that we were wondering, will Apple break? This is the exact same January 25th high the bears said Apple would never go below, that was going to take Apple to 110. Now they're saying the same thing about Tesla going to 410. I don't think either happens. So that's Tesla. Let's look at some other, kind of quirky electric vehicle stocks, right? We're seeing right now, a lot of people think the market's going to crash. I think what's really going on, we're having massive rotations into a couple of sectors. One of those sectors is the high growth stocks like Workhorse and Arcimoto, Nano Dimension. We talk about Microvision, and another, recipient of that is going to be these, high value stocks, that we're about to talk about towards the end of the video. But this is Workhorse. It goes on a 1, 2, 3, 4, 5 large degree wave 1. An ABC correction puts in a large degree wave 2 at the 78.6% retracement. This is the exact same 78.6% retracement when we look at Arcimoto that, FUV formed. So right now, if Workhorse is above 707, that's a wave 2 low. We're about to see, another electric vehicle with Tesla go on a huge wave 3 rally that will be the length of wave 1, placed at the wave 2 low. So I'm, interested in the idea of buying shares of Workhorse against that low of about 7.20, 7.07 is that wave 2 low. If that holds, that's wave 2, and Workhorse is about to enter a wave 3 rally higher. And as wild as it sounds, the minimum wave 3 target is 49. We'll have a shallow wave 4 correction. We'll go on a 5th wave higher. That's crazy, right? How on earth could that possibly happen? Well, let's look at this. Workhorse has a 34% short float. A 34% short float on an electric vehicle stock right now. And if we look at Arcimoto, it's even more damning. A 39% short float. A 39% short float with 6 days to cover for Arcimoto. and they're both putting in wave 2 lows. So that's where this juice is going to come from. And I think right now there's a lot of opportunities in the market in kind of these high growth electric vehicles, against this wave 2 low of 7.07 at the 78.6% retracement is one of them. So that's Workhorse. Here's Arcimoto. It's sending a similar message that this is a 1, 2, 3, 4, 5 large degree wave 1. This is an ABC correction putting in a wave 2 low at, again, the 78.6% retracement. So Arcimoto will go the length of wave 1, place of the wave 2 low, and reach 43. Now this is a 10-month rally. 10 months from now, that first quarter of 2022 is where we're seeing across the market that a lot of very high growth stocks like Microvision and Nano Dimension and Tesla have gone to replicate their entire 2020 rallies. I think Arcimoto is another one where against that low of 7.32, the length of wave 1, place of the wave 2 low, will take it all the way to 43. People think the stock market's going to crash, and a lot of electric vehicles are flashing the, explosive signs right now, not just from a wave theory perspective, but from a mathematical perspective, that a 39% short float and a 34% short float, that's pretty frothy from the bears right now. Okay, so anyway, if against that low of 7.07 for Workhorse and 7.32 for Arcimoto, that's a wave 2 low. The length of wave 1, place of the wave 2 low, will take each of these into the 40s, for that kind of first quarter of 2022 target. But I'm more interested in these as long-term shareholding for myself personally. So that's Arcimoto, that's Workhorse. Let's talk about the S&P 500. So this is the S&P 500. Well, let's look at the futures real quick, kind of talk about the shorter-term view of the stock market. So, I think that this is the most important thing right now to understand. This is wave 1 and this is wave 2. Okay, we've had the length of wave 1, place of the wave 2 low, taking the S&P 500 to 4,600 since the election. Okay, I've been calling for 460 since the election, and we're very close to that right now. So this is wave 1 and wave 2. The length of wave 1, place of the wave 2 low, gives a conservative wave 3 target of 4,600. So I'm going to delete this right now because we're going to talk about the smaller degree and why that might be conservative. So this is wave 1 and wave 2. I believe we are within the red wave 3 right now. This is wave 1 of wave 3. This is wave 2 of wave 3. We are within wave 3 of wave 3. So I think right now the invalidation level, realistically is all the way down there at about 4,126. So about 412, 413 on SPY is the next real invalidation level. Okay, is that practical? No. That's why we have to trade the stock market as a whole. I think, generally, Apple and Amazon and Microsoft, they're going to be better gauges for the market. But I think right now we're going to hold above 4,126, 412, 413 on SPY, and go the length of wave 3, place of the wave 4 low, which is all the way up there at 4,546, basically 454 on SPY. That really coincides with the negative 123.6% retracement, the inverted retracement of wave 4, which would give us a wave 5 target of about 4,485. That would only be wave 3. We would have a shallow and sideways wave 4, and then we would go on a 5th wave higher. There would be the length of wave 1 placed at the wave 4 low. Ultimately, the bottom line is that 4,600 for the S&P 500 is a very conservative wave 3 target. More than likely, we're going to blow past that. Okay, so this is kind of the primary path that I have us getting there, is we go to about 448, 454 on SPY, have a shallow wave 4 correction, and then go on a wave 5 higher. What that's going to do is that's going to pass this kind of minimum wave 3 target, which I'll make in red, and that's where we're going to get to, what I've been calling to since the election of the equal legs target, the length of wave 1, place of the wave 2 low, which takes the S&P 500 to about 4,600. So that's the S&P 500. Let's look at the bigger picture for the S&P 500. So I've got the S&P 500 full count, from the 1980s. Okay, this is what I believe it looks like. This is a wave 1, and an ABC correction puts in a wave 2 low. So the dot-com bubble is a wave 1. The housing crash of 2008, where we put in that low in 2009, is a wave 2 low. So the big debate right now in the wave theory community is this rally up until January 2020 a wave 3? And is this, this March 2020 sell-off a wave 4? Or is this another wave 1 and another wave 2? Just like the beginning of the video, you really can't answer that question by just looking at the S&P 500. But we have a lot of evidence from the value side of the market that this is a wave 1 and a wave 2. So I believe right now, this is a nest that we are breaking out of right now. And ultimately, the length of wave 1 from the entire rally from 2009 to January of 2022 is all just wave 1. The wave 2 low that we put in March is wave 2. The length of this huge decade-long rally is going to be replicated for wave 3, and that's conservative. Then we have a shallow and sideways wave 4 before we go on a 5th wave higher that will take the S&P 500 to a level that is going to get me, put in an insane asylum of 6,565. Now that sounds crazy, but that's conservative in the longer term, bigger picture of the stock market, okay? This is why the people who focus on compounding and playing the long game are going to fare a lot better than the people who get obsessed with, trading these day-to-day fluctuations. This is a wave 1. This is a wave 2. We're within wave 3 of wave 3 right now. The minimum target for this big old wave 3 is about 4,894. Then we have a shallow wave 4 correction. We go on a 5th wave higher. If it's at least the length of wave 1, place of the wave 4 low, that takes the S&P 500 to 6,500 in the bigger picture. And that's just wave 3 that would be complete. So anyway, I think it's important to talk about, the bigger term perspective. All right. Is it just the S&P 500 that sends this message? Of course not. So right now, we're going to talk about Chevron. We're going to talk about Boeing. We're going to talk about American Airlines. So I want to stress Boeing and American Airlines, they have not gone the way that I thought. Okay. You can just say I was completely wrong about Boeing and American Airlines. This is kind of the old guru cliche. I was wrong about the timing, but I was right about the price. I still believe I'm right about the price. So this is Boeing. Let's talk about the short-term view. This is a wave 1 and a wave 2. You connect the beginning of wave 1 with the high of wave 1 and the low of wave 2. Ultimately, this big black wave 3 target will end at the median of this pitchfork. Okay? So what I had, here's what's still intact. What's still intact is that this is wave 1 and wave 2. What's also still intact is that this is another wave 1 and another wave 2. So when we broke above this wave 1 high, that kind of confirmed that we were incomplete to the upside. At the very minimum, Boeing would go the length of wave 1, place at the wave 2 low, and reach about 296 to 307 for this wave 3 target. Now, we broke below this low of 219. So my prior projection on Boeing has been invalidated. Okay, and that's pretty important. So what's going on right now is we're back to this larger degree wave 2. The larger degree wave 2 low is 192. Okay, if we hold above 192, then we still have what was always the more important count, that this is a wave 1 and a wave 2. Boeing will go on a wave 3 rally higher that will take it to about 296 to 307. Okay, that wouldn't be the top. We'll have a shallow and sideways wave 4 before going on a 5th wave higher. I still believe Boeing's going to the 300s, and it's even going to the 400s. And the borrowing adage from our classical trading friends, the longer the base, the bigger the breakout. Okay, if you take a picture of the bar chart straddle strangle screener, Boeing has been on the screener for months. It's been on this screener for about 2 months that we've been accumulating options on Boeing and Carnival Cruise Lines and all these reopening stocks. Okay, this is very similar right now to how we were back in, late December, early January. Boeing's just boring people to tears, and then boom, a ripping rally from 200 to about 280, in a matter of weeks. Let's look at, the bigger picture. We've got earnings coming up for all these airlines, okay? A pretty swift move is coming. Options are being accumulated, and I think the large move is going to be the upside. It's going to be a repeat of January and, late December, where Boeing's just boring traders to tears before this massive rally higher. If we want to be, really tight on the smaller degree, this is probably a wave 1 and a wave 2 ending at the 61.8 to 78.6% retracement. I think for all airline bulls, for all, cruise line bulls, probably the most important level that's a reasonable stop right now is Boeing holding the length of wave 1, place of the wave 2 low. We're going to see Boeing reach 296 to 307. We've got earnings coming up. The sentiment on this sector is terrible, but we're about to talk about a lot of value stocks that are really supporting this. So is there a bright side to me being wrong about the timing of the airlines? Yes, I know that's a guru cliche. I was wrong about the timing. Is there a bright side to this? For the general market bulls, yes, because I still believe that we're going to see these wave 3 rallies play out. And so the longer that, Boeing's not at 300 and American Airlines isn't at 30, the more upside the market has generally. And we'll talk about Chevron in a second, and a lot of value stocks are really supporting this idea that the blood in the streets right now is the opportunity. And if we're not being robotic, we notice, okay, wait a minute, every airline will report earnings in the next 2 weeks. Let's see. This is American Airlines, a wave 1 and a wave 2. We have a wave 3 right now in progress that I believe ultimately will end at 31 because that's the 161.8 extension of wave 1. That's the wave 3 target. I think right now the subdivision looks something like this. This is a 1, 2, 3, 4, 5 waves impulse, in progress. I'm still expecting that we're going to have a rally that takes American Airlines to 30. To be completely honest, there's not really a reasonable invalidation level or a stop level for American Airlines unless we're going to go all the way down to 14. So I still think for a lot of the airlines, a lot of the cruise lines, we want to see Boeing above 192 to 193. I'm still expecting Boeing to go to 300 and 307. I'm still expecting American Airlines, all these airlines to go on these rallies higher. Let's look at a couple of value stocks right now. Let's look at Chevron. Chevron's really supporting this idea in kind of the shorter term that this is, what we're expecting to play out, where this is a wave 1 and a wave 2, just like American Airlines, just like Boeing, we're within this larger degree wave 3 that will end at the 161.8% extension. So I believe Chevron is ultimately going to go on a wave 3 higher to 135, which is the 161.8% extension. So this is a large degree wave 3 subdivided into 1, 2, 3, 4, 5 waves. So I really like Chevron right here as a template for the market. Some traders are going to say, well, the length of wave 1 placed of the wave 2 low has not been reached for wave 3. That's actually a very astute observation. I said in my last video that I believe that this is a leading diagonal that is forming on the larger degree, and that's really the one exception to the rule that wave 3 can be shorter than the length of wave 1. But I'm expecting right now that Chevron is completing an ABC correction, ending a wave 4 low, and we're going to see, a large rally higher in this stock as well that takes it to 130, 135. Lots of interest across the stock market, in the options market, for these value names like Chevron and Carnival Cruise Lines and some of these travel and reopening stocks that haven't gone well, but I still think that the price targets are still very intact. We're seeing Boeing, we're seeing Raytheon. A lot of stocks in the value sector have been on the bar chart straddle strangle screener for weeks, just like they were in late December, early January, before they had these large rallies in the first quarter. So this is Chevron. Let's talk about the bigger picture for Chevron, because it's pretty similar to what we see for a lot of these stocks. And it's helping the idea that, when we look at the S&P 500 and we have to ask ourselves, on the bigger picture, is this a wave 1 and a wave 2, or is this a wave 3 and a wave 4, and we're going to, crash when we end wave 5? The value names like Chevron, Boeing, and, American Airlines, they're really kind of giving this idea that, on the super big picture, yes, I know you're not supposed to turn a trade into a long-term investment, but these have always been long-term investments. I bought American Airlines at 13, and I think that, Boeing and American Airlines, they're very similar ideas, as well as Chevron. This is a 1, 2, 3, 4, 5 super cycle, large degree wave 1. I think that's actually the grand super cycle, large degree wave 1. Then an ABC correction puts in a large degree wave 2, at that low of 89. So what would happen if, I don't think it's going to happen, but what would happen if the airlines continue to crash? Well, they become huge buying opportunities from a long-term perspective, in my humble opinion. But I think right now, it's important to remember that these are all grand super cycle wave 2 lows that Boeing's put in, and that American Airlines has put in, and that Chevron's put in on the bigger picture. That this is a wave 1 and a wave 2, And then that's an extremely important low that really the entire transportation sector and a lot of oil stocks put in, March through May of 2020. Chevron is a very pretty picture of that, where it's a 1, 2, 3, 4, 5, large degree wave 1, and the ABC correction puts in a large degree wave 2, right there in that March 2020 low. And that's helping us make the decision that very likely this is another wave 1 and another wave 2 for the S&P 500, not a wave 3 and 4 where we're looking for a super crash, when we finish this impulse structure. So that's the S&P 500. I want to talk about a few other value stocks that I really like. I want to talk about Trinseo Corp, Unifi, and Energy Fuels, as well as Pfizer, because there's a lot of opportunity right now. Like I said at the beginning of this video, I wish this was a long-term shareholding video for myself personally, because I'm going to be buying some of these Monday morning. I really, think there's a lot of opportunity right now. So this is Trinseo Corp. I haven't talked about it much. It's a very similar count to Unifi and a lot of these value stocks where this is a 1, 2, 3, 4, 5, large degree wave 1. This is an ABC correction putting in a wave 2 from this low. So a lot of people think, the value thing was a fad, right? Inflation's transitory. We're going to crash. No, this is wave 1. This is an ABC correction putting in a wave 2 low. The length of wave 1, place of the wave 2 low. I'm very interested in Trinseo Corp, ticker symbol TSE, at this level. If it holds above the Ichimoku cloud on the 3-year chart, that's going to give the best invalidation level. The 3-year chart, this weekly chart, I want to see it hold above 46. I'm looking to buy and hold long-term shares of Trinseo Corp for myself personally. And a lot of these value stocks are looking like incredible opportunities. We'll talk about Unifi in a second, but this is a 1, 2, 3, 4, 5, large degree wave 1. If this is above 46, I think this is an ABC correction being complete. The length of wave 1, place of the wave 2 low. We'll take Trinseo Corp to 114 for a conservative wave 3 target. Now, most people, they don't know what the hell this stock is. This is a stock that, manufactures rubber, right? This is a material stock. And that's the point. A lot of value stocks right now are incredible opportunities. This is a 1, 2, 3, 4, 5, large degree wave 1, and ABC correction puts in a large degree wave 2. This is another wave 1 from the March low and a wave 2 correction. The inflation trade is about to be back on, right? And everyone wants to chase, these tech stocks, at my targets. But realistically, the opportunity is in value. The length of wave 1, place of the wave 2 low. If Trinseo Corp holds above 46, I'm looking to buy and hold shares until 114. That's very similar to how I feel about Unifi Corp. Remember, Trinseo Corp, that's a rubber company, right? This is a company that makes cotton, right? This is cotton. And, we talk about gold and silver. This is the length of wave 1. It's just like Trinseo Corp. A 1, 2, 3, 4, 5, large degree wave 1. It's almost identical. And ABC corrections putting in a large degree wave 2. I love these value names right here. I really do. I'm gonna buy and hold shares of either Trinseo Corp or Unifi. I haven't decided which one, but I think I'm gonna pick one of them. And then if the other one keeps falling, I'm just gonna buy the other one on the dip. But this is Unifi. This is a large wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. So if it holds above 20, really if it holds that 3-year Ichimoku cloud, I really like this opportunity. For myself personally, that this is a wave 1 and a wave 2, right? This is the first leg of the inflation trade, okay? Inflation was not transitory. This whole rally that we saw across the materials sector is going to be replicated twice more. I love Unifi. I love Trinseo Corp. But this is also a message that, for a lot of value investors, this was not it, okay? This was wave 1. And this is wave 2. The length of wave 1, place of the wave 2 low. It's going to take Trinseo Corp to 114. It's going to take Unifi to 45. And it's another one. That's a huge nest on the bigger degree, where this is a wave 1 subdivided into 1, 2, 3, 4, 5 waves. This is an ABC wave 2 low. And so we're heading right now into wave 3 of wave 3. So I love Unifi. I love Trinseo Corp. They're really stocks for the videos I do at the very end of the month. But this was one, man, this one made me really happy. I didn't think that I was going to get this opportunity. I really didn't. I scaled in and bought a half position of Energy Fuels right here at 4.78. And I thought I was going to get another chance, but then it took off. I think right now, Energy Fuels, this is a huge uranium mining company where this is a wave 1 and ABC corrections put in a wave 2 low. I'm going to make this a full position Monday morning, but this is energy fuels. It's a 1, 2, 3, 4, 5 large degree wave 1, and ABC Corrections putting in this large degree wave 2. The length of wave 1 placed at the wave 2 low will take energy fuels all the way to 11. That's a very conservative wave 3 target. We'll have a shallow wave 4. We'll go on a 5th wave higher. So I think that there's a ton of opportunity for traders who hypothetically want to play the long game in the value side of the market. I don't think we're going to continue to have opportunities to buy some of these material stocks at these levels. I really don't. That's energy fuels. I'm going to upgrade that to a full position. Here is Pfizer. We talk about Pfizer a lot. It's another one very quietly with Procter & Gamble making noise in the value side of the market. This is a wave 1, an ABC correction puts in a wave 2 low, or you can call this an ABC correction putting in a wave 2 low. Either way, this is a 20-year basing pattern. We have another wave 1 and another wave 2. On the larger degree, Pfizer is going to the median of this pitchfork. It's heading to the 60s. It's ultimately heading to the 90s, in my humble opinion. Pays a beautiful dividend. We're starting to see this, finally move. I think right now it looks something like this, where this was a wave 1, and what we really want to see is confirmation that this is the wave 2 low we put in at the 61.8% retracement. We're kind of seeing this bull flag start to play out. The important thing is that the length of this first leg of the bull flag placed at the low will take Pfizer to 45. I think that connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2 will take Pfizer to the median of this pitchfork. But really, the most important thing right now is that once we see Pfizer break above 43, that's going to be huge. That's going to confirm this is the wave 2 low we put in. This was all a huge base, huge accumulation. We're within wave 3 right now of a larger degree wave 3 of a larger degree wave 3. It's wave 3 inception, and that's what we're seeing across the value side of the market.